surprising move, Tesla has quietly updated its website to allow customers to pay with Dogecoin Doge for the new Tesla Cybertruck model. Because when the site codes are examined, it is seen that there are many new codes related to Doge integration. However, this change has not been officially announced. It is currently only available as coded information on the website, and it is not currently possible to pay with Doge. This isn't the first time Tesla has accepted Dogecoin as a form of payment. Previously, when Tesla added the ability to pay for an ATV for kids with Dogecoin, the Doge price increased significantly. However, the price had dropped the next day. Tesla's journey with the Cybertruck has been a long one. The first production candidate Cybertruck was completed in July, nearly 4 years after it was first announced and 2 years after production was scheduled to begin. Last year, CEO Elon Musk cited supply chain issues affecting the supply of components as a factor in delaying Cybertruck production to 2023. After 4 years of delays and missteps, the Tesla Cybertruck has finally arrived. Musk hosted a delivery event at the company's factory in Austin, Texas, where he highlighted the vehicle's towing capabilities, bulletproof doors, and straight-line speed. A few customers picked up their Cybertrucks at the event, but opening the door was a bit difficult. Following the event, the company published updated details about the vehicle's features, price, and more on its website. Potential spot Bitcoin ETF approvals next year could coincide with reduced liquid supply, positively impacting the valuation of BTC. According to a report, supply dynamics may result in a reduced liquid supply early next year, coinciding with the potential approval of spot Bitcoin ETF filings, Grayscale Investments said Friday in a research report, adding that the dynamic could have a positive impact on the valuation of the digital asset. Bitcoin supply is relatively tight ahead of potential investor inflows into spot ETF products in the US, Grayscale said, noting that a significant portion of Bitcoin is held by entities that may be slow to sell into an appreciated market. The asset manager is one of more than a dozen firms currently seeking approval for a spot Bitcoin product from the Securities and Exchange Commission. The report also said that next year's Bitcoin halving could also limit the growth of new BTC supply. This combination of inelastic Bitcoin supply and potential new investor inflows should be positive for valuations, in our view, Grayscale said. However, Grayscale said that there are conditions that could counter the thesis that positive price appreciation for Bitcoin in 2024 is assured. These include a possible hard landing for the U.S. economy next year. The report said that such an outcome could see a resumption of Fed rate increases or fewer than expected Fed rate cuts, or a long delay in regulatory approval of a spot Bitcoin ETF for the U.S. market. These risks could significantly hold back the ongoing crypto recovery, at least over the near term, Grayscale said. The largest digital asset by market capitalization was changing hands for $38,580 at 11:50 p.m. ET, up almost 3% in the past 24 hours, according to the block data. Crypto-related crimes hit a high in November 2023, causing $363 million in losses, highlighting the urgent need for better security. Exploits and flash loan attacks were the major culprits, with notable losses on platforms like Poloniex and KyberSwap. The crypto industry must step up security measures as 2023's losses, totaling $1.7 billion, indicate a growing trend of attacks and vulnerabilities. November 2023 has proven to be a turbulent month for the cryptocurrency space, as illicit activities surged, resulting in substantial financial losses amounting to approximately $363 million. This unfortunate record, reported by blockchain security firm CertiK, underscores the pressing need for improved security measures within the digital asset industry. Exploits and attacks lead to substantial losses. The most alarming contributors to this record-breaking month were a series of exploits and attacks on various cryptocurrency platforms. Exploits accounted for a staggering $316.4 million in losses, while flash loan attacks added an additional $45.5 million to the tally. Exit scams also played a role in this unfortunate statistic, contributing to the theft of $1.1 million. Two major platforms, Poloniex and HTX Heco Bridge, suffered the most significant exploits, with Poloniex losing $131.4 million and HTX Heco Bridge facing $113.3 million in damages. These incidents stand out due to their magnitude and the impact they have on overall trust in the crypto ecosystem. One particularly distressing event involved a single victim who fell victim to a phishing attack, resulting in a loss of $27 million. This incident highlights the sophistication and severity of individual targeting by cybercriminals, emphasizing the need for heightened vigilance among cryptocurrency users. Flash loan attacks pose a growing threat. Flash loan attacks, notably the $45 million Kyber swap attack, accounted for a significant portion of the damages in November. These attacks exploit vulnerabilities in decentralized finance DeFi protocols, posing substantial challenges to the security of these platforms. The increasing prevalence of such attacks is a cause for concern in the crypto community. Surpassing previous records. The total losses in November 2023 exceeded the previous record of $329 million set in September, primarily attributed to the $200 million Mixon network attack. According to Certica, by the end of November, the cumulative losses due to exploits, exit scams, and flash loan attacks in 2023 amounted to approximately $1.7 billion. While this is a substantial figure, it constitutes only 54% of the total losses recorded in 2022, a year that witnessed $3.7 billion drained due to similar incidents. Comparatively, 2021 also recorded losses amounting to $1.7 billion, according to Certic's analysis. These statistics reveal a troubling trend of increasing attacks and vulnerabilities within the cryptocurrency space, emphasizing the escalating need for more effective security protocols and measures to safeguard investors' assets. Proactive measures by countries. In response to these growing concerns, some countries are taking proactive steps to enhance cryptocurrency regulations and protect investors. One notable example is Dubai, which announced in August its intention to introduce a new licensing program aimed at crypto service providers. The Dubai Virtual Asset Regulatory Authority (VARA) proposed new guidelines for the marketing, advertising, and promotion of cryptocurrencies, with a focus on enhancing investor protection measures in the region. As the cryptocurrency space continues to evolve and expand, the challenges it faces in terms of security become increasingly evident. The surge in illicit activities and financial losses in November 2023 serves as a stark reminder of the urgent need for enhanced security measures and vigilance within the digital asset industry. Investors, businesses, and regulatory authorities must work collaboratively to address these issues and ensure the long-term viability and trustworthiness of the cryptocurrency ecosystem.